It examines the convergence of artificial intelligence and Bitcoin. And you'll hear his nickname's Roast Beef on that podcast talk about that convergence and how it's going to redefine the division of labor. It's probably going to put the gig economy on steroids. And it's starting already in the emerging markets, in Africa in particular. So it's very exciting. I don't think people understand how hard at work the developers around the world have been. Lightning Network is a big part of leveraging the base layer Bitcoin. So we're very excited. We're so happy that ARKB is going to be part of the ecosystem. You'll find in our big ideas, so that's at arc-invest.com, the building blocks for our price forecast. And our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. You can see the building blocks. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history. It is a very big idea.
Welcome to the Cryptoteacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we have Kathy Wood saying what I've been saying from the beginning. The robots, algorithms, and drones are about to take over the economy, and the sheep are going inside the metaverse. She stated the combination of AI and Bitcoin speeds up the gig economy. And where does it start? That's right, the emerging markets. Guys, you can't make this stuff up. She doesn't give you the reason why, but she definitely tells you the plan. And we know it's all about the fourth industrial revolution. Now we have Pomp on CNBC speaking about the Bitcoin ETFs. And again, he says what I told you a long time ago. Once we get these spot Bitcoin ETFs, because they're actually buying Bitcoin, it's going to take some of the volatility out. And remember, the Cryptoteacher told you this volatility now is going to move to Ethereum and altcoins. Now we know we have Kathy Woods and others putting out these big figures of what Bitcoin can hit. And can it hit 100,000, 150, 600,000? Guys, it's all up to the Fed and whether Bitcoin gets pegged to machines. In order to hit 600,000, a million, it has to be pegged to something. And will it be the money for the machines? Guess what? We'll sit back, get our popcorn, and let it play out. But when it comes to the Bitcoin ETFs, Pomp says we're only going to have about 2 or 3 winners. And we know when it comes to gold ETFs, we have plenty of them, but they're always finding new, big, giant gold deposits. When it comes to Bitcoin, we know right now we have a limited supply. Could that have changed before? Yes. We know in the white paper it could have scaled, but we know that was stopped, so now we do have a limited supply, and we know that NWO only wants about 2 or 3 to survive. But now that we do have these spot Bitcoin ETFs, it does make it easier for the retail investor. You don't have to worry about all these high Coinbase fees. And yes, Coinbase is going to take a hit when it comes to fees, but that's the reason why all these companies made Coinbase the custodian, the bank. Guys, remember this is a plan. It moves in phases. And don't forget, we had the Gary Gensler warning because we know because of the Bitcoin spot ETF hype, we had a lot of people buying Bitcoin at 47, 46, and 48,000. And they don't have diamond hands. When they start seeing Bitcoin drop, they're going to feel like they lost out and they're never coming back. Guys, we've seen this movie before. You definitely have to have patience in any investing. You're looking 3, 5, 10 years down the road. and we know what the fourth industrial revolution looks like, but unfortunately 99% of the sheep don't. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Moment in the sense of it's the first time that the internet and Wall Street, they've had this healthy tension for a couple of years, even a couple of decades, and it's the first time Wall Street blinked, right? Think of it. It's an internet-based asset that now is being arms wrapped around it by Wall Street. And to your point, now that everyone can buy it, financial advisors are saying, okay, ETF regulators are on board. I'm going to go put it in everyone's portfolio. The volatility is going to drastically dampen from here.
But then it could make the move to Andrew's currency that it's never been. You made the point you don't want to buy a pizza for $25,000. Right. They've said there's too much volatility for it to ever be transactional.
Right.
You know, as a store value, maybe they said, but if it has no more volatility, maybe it turns into something.
Well, I think
like that.
When I say no more volatility is going to dampen, what I mean is over the last 4 years, Bitcoin has had a compound annual growth rate of over 50%. And then people are like, oh, that's unsustainable for 4 years. But if you go back over the last 10 years, it's still been 50% compound annual growth rate. And so what I think will happen is it'll just start to taper off a little bit. And in the next 5 years or so, it'll be like 20%, which is still double what the stock market
That won't get to Tom Lee's $500,000 though.
Ethereum might be some form of a.
That's up a lot more than Bitcoin today.
There are a lot of other. There are probably a lot of, from a technological perspective, a lot better actually. Different technologies in the blockchain for that purpose, if that's what you think this is.
Yeah, there's another interesting thing that's happening, right? So if I go on Wall Street and I ask people, what is your benchmark? They'll tell me the S&P, maybe NASDAQ, right? They have these equity-based benchmarks. If I go ask a 25-year-old or younger, Bitcoin is the benchmark. And so the reason why that's interesting is there's an entire generation of people who say, if I can't beat Bitcoin, then I might as well just buy it. And that's why you see those people, the only thing they're allocating to is Bitcoin or the long tail of crypto assets they're basically speculating on. And so as those people age, now Bitcoin becomes that benchmark. It's going to get into everyone's portfolio. So volatility will dampen down. But ultimately, if you want mass adoption, everyone's got to put it in their portfolio, right? And so the days of the asymmetric 1,000% increases in a single year are probably gone. But an asset that's compounding at 20, 30, 40, 50% a year, you can't get that in the stock market. So I still think it'll be very attractive to an F of a finite asset, right? Every asset is got some degree of increasing or expanding supply. This is a finite asset. And so now all of a sudden you have what could be tens of billions, hundreds of billions, depending on who you ask, that's going to come into this over the next, let's say, 10 years. But there's still only 21 million
There's
Bitcoin.
gold ETFs, aren't there?
But gold still, the supply is expanding. It might not expand very fast, right?
Same with Bitcoin, though. When's the last Bitcoin going to be mined?
2140. Yeah, 2140. And then you got to also remember, there's 70% of the Bitcoin that hasn't moved in the last year. And so now we have institutions that are banging on the door. And I think it's important to talk about the fees that have changed as well, right? If you look at Bitwise is now the cheapest Bitcoin fund in America in the sense of it's 0.24% fee, and they just dropped it down to 0.20. That's a 90% difference between where it was a couple days ago in terms of the publicly available Bitcoin fund, beating the fee war. And so 0.2, 0.3, 0.4, how much does it really matter? Some advisors really care. Other advisors say, hey, I just want to buy something that's a great product that I think is going to track the price correctly. But what I think is going to ultimately end up occurring is there's going to be tens of billions of dollars that are going to flow into these ETFs, and you have a finite asset. So it will go up.
How many of these ETFs do you think will exist in a year or two from now? I think will there be so much consolidation, or some of them just decide I'm not doing this anymore?
I think there will be more 12 months from now in the aggregate number, but there will be a clear 2 to 3 winners, right? And so my guess is that BlackRock will end up being very, very successful. I think Grayscale will hold on to a lot of assets. And then there's kind of this competition among what I'd say all of the like digital or internet-based kind of innovation tech type ETFs. They're all going to go fight it out. And so if you have 3 big winners, right, then that ends up being probably tens of billions of dollars. Fee war may leak out into custody fee war and also exchange fee war. So Coinbase may have to drop their fees because it may be more inexpensive to hold the Bitcoin ETF for a year than to make one simple trade on Coinbase. So obviously there's pressure there. But also, I think there's a very, very big contingency of people who are educating others about Bitcoin who say buying the ETF is not buying Bitcoin, right? You're buying exposure to Bitcoin, but you're not actually buying the Bitcoin. You're not self-custodying that Bitcoin. And so what we're going to see is how many people care about self-custody versus care about just the exposure to the price.
Coinbase,
I think that will shift.
It can't be good near term. Coinbase's fees.
Coinbase is highly
blows me away whenever I've done anything on Coinbase. Yeah. It's like, wait a minute, it was trading here. Why am I getting it? And I look at it. I mean, what are they, 5% or something?
Here's another really interesting idea from an investment perspective is the public market drastically or misunderstands a lot of these crypto businesses in the sense of Coinbase has their exchange fees, they have their custody fees. They also have a lot of what I'll call crypto native revenue, right? So they have this new blockchain called Base, and they're generating a lot of revenue there. Miners, a lot of their revenue is actually driven by the price of Bitcoin. So if the price of Bitcoin doubles, their revenue doubles because the revenue is denominated in Bitcoin.
The fee structure itself.
The fee structure, it will compress, but they're essentially just shifting it into more of a crypto native revenue stream.
And they're everywhere. And I'm not going to mention any names, but they're everywhere. People that would never do it. You had to open a Coinbase account, or you had to get your own wallet, or you had to do it. Now it's going to be really easy to do it with $10,000. I mean, to put up 50 to buy a Bitcoin, that's almost not an institutional person, but someone with a lot of conviction. If anyone could buy 10 grand worth right now, and Kathy Woods says it's going to 750,000. So people are going to put 10 grand in and have 150,000 in a couple of years. That's too easy. I think you could make a case that the people that had the nerve to do it and step out and not be part of the pack that just were anti-Bitcoin, they've already made their money. Now, not everyone else is going to get rich now. It's too late.
Listen, the earliest adopters always get richest, and so in that.
You think it's going to 750? You can buy it now.
Her lips to God's ears. I do think over time this will continue to appreciate. Do I think it's going to 750 in the next year, 2, 3 years? No, I don't. I hope it doesn't, quite frankly, because if it does, it means the U.S. economy has really fallen into dire straits.
I just think the smart money and the institutions are in. Now it's going to be the bag holders that get left with.
What I think you're missing is this is a limited supply asset. We don't have a lot of limited supply assets. And there are a lot of people that believe in this like a religion, so they're not selling.
That's right.
And so
70% won't sell. So where does it come from?
And so you're going to drive price up as you get more adoption.
Short term, do you say to yourself, there's a whole bunch of people who've bought in the last 3-4 months waiting for this day to come? Do they sell into this? Do they hold?
I think today we could literally see 50,000 and 40,000 trade. We're going to see a lot of volatility today. Traditionally, ETFs mark the high, the short-term high, right? Almost every one of them has come out. Then there's a sell-off, and then there's the rally.
ETFs approved today, and of course, it was a big day for Coinbase too, because we were named as the custodian in 10 out of 13 of these applications. So I think this means that over time, we'll see new pools of capital come into Bitcoin. But more importantly, we had a huge regulatory milestone that showed the legitimizing power of this industry.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.